Good evening, everyone. A massive and surprise sell-off in the markets today. The worst day on Wall Street in more than 5 weeks. But it didn't start out that way. The major averages actually began the day higher after first-time jobless claims fell by 9,000 last week, dropping to a 3-month low. And then also retail sales in February were better than expected, with Americans buying more cars, clothes, and furniture. But investors got spooked over developments in Ukraine, China, and the Eurozone. At the end of a volatile day, each of the big indexes fell more than 1%. The Dow tumbled 231 points, the Nasdaq lost nearly 63, and the S&P was down 21 points. Bob Pisani has more from the New York Stock Exchange on today's market action and what might happen next.
It was an ugly day for the markets, which were battered by events outside the U.S., in China, in the Ukraine, and in Germany. We saw first very poor economic news in China, where industrial production and retail sales were both weaker than expected in February. And that's confirming that China is slowing. We also saw rising tensions in the Ukraine, where the acting president there said he saw a risk of war with Russia and that there were reports that Russia fired on a Ukrainian plane over Crimea. And finally, strongly worded comments from German Chancellor Angela Merkel to the German parliament, in which she warned of a catastrophe unless Russia backed down, saying it would change the European Union's relationship with Russia. Now, that affected Europe. The German stock market is now at a 3-month low. It's been a very ugly 5 days over in Europe. Here in the U.S., stocks were weak right across the board, everything from momentum names to consumer discretionary and financials. One positive standout was utilities, which was up as traders sought more defensive parts of the market. Now, in fact, the yield on the 10-year Treasury dropped about 1/10 of a point to 2.65%. That's another sign investors were moving toward safer investments. Down here on the New York Stock Exchange floor, there was little sense of panic. In fact, most traders noted we are still only 2% from historic highs in the S&P 500. For the Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.